Welcome back. I really hope you've been enjoying my video so far. Let's get into the video. So in this video, I want to just bring an educational point of view to this video because I've just been doing technical analysis video. So if you are seriously interested in what I do, I would highly recommend you get into learning about investing first. You have to learn about what is the market, how does a stock work, different investment strategies and stuff like that. So it's really important to actually take some time to go and learn about it. And this website is a great website to start, Investopedia. They do have their directory here that you can go on and just start learning. These are all different things to learn about. You don't have to learn about absolutely everything, but it's nice to have one place where you can go. Look, if I want to learn about bond, I just have to come down here and click on bond. Boom. If I want to know Berkshire Hathaway, boom. Balance sheet, what they are, boom. I know about it, because in the process of your investment journey, you're gonna have to know what some of these terms means, what they mean, what's a dividend, what's a CEO, what's a dividend yield. These are all things that you will need to know about if you want to get involved in the financial markets. So it's this website is really great to get started, and is a free platform. You don't have to pay for it, and you can learn about the market. The other website I use a lot is obviously Tradingview. As you can see from my video, I use Tradingview a lot. Tradingview is really great, but it's more for people that are already into finance and they just want to see numbers. Because someone like me, before I start trading every day, I like to see the futures. I like to know what's going on in the future, so I click on the future. As you can see, S&P is inching up, and S&P is currently up here. Actually, let me go to so as you can see, the market is pretty up at the moment, and this is what's going on in the future, right? So potentially price of stocks could inch up tomorrow. So I know most likely the market is in an uptrend in general, right? So this is how I use some of these tools, and you can use it, to keep up with what's going on with currencies, what's going on with different stocks, what's going on with bonds. These are stocks from the UK, cryptocurrency. It really gives you a nice visual of what's going on in the financial market, so you don't have to spend so much time on any particular thing. Now, the next thing that you might want to keep in mind and you might want to keep track of, but this is more for like advanced people. I'm so sorry with all these ads. This is more for advanced people. You might want to start using this website as well. It really give you a nice graphical picture of what's going on in the market, and a lot of data of what's actually going on, which companies are up, which companies are down, which companies are going to report earnings and stuff like that. This is also a great website to use. Okay, before I get into this investment strategy here, which you can learn from Investopedia, you can learn it from here as well. But before I get into that, I want to show you this picture right here. This is it's just a picture from TD Ameritrade. These are all the different markets that you can learn about. You can learn about stocks, you can learn about ETFs, mutual funds, option, fixed income, futures, Forex, which is like the currency market. A lot of people trade the Forex, so trade the Forex market, especially people that might not have access to trade in the stock market or trade in the US stock market. You can trade your country's market. But it all started for me here. Personally, I got in here and I started learning about what things are. So I would highly recommend you start your journey here as well and go to investopedia.com and go to education, and you're not going to regret this. Okay, so let's get out of that and get out of this, and let's get into this portfolio right here. This is an investment strategy that I follow, that I absolutely love. It's a dividend growth strategy, and this is the definition of what it is. I'm going to leave a link in the description so you can read up on what it is and how it works, and to see if it's something that will be beneficial to you. It's something that it's beneficial to me, that I'm definitely following, that I've actually set up a portfolio of my own with this investment philosophy in mind. Currently, for those that are a bit more that are into finance, you see that the dividend yield it's pretty nice. It's not like the best, but it's safe. It's safe because when you're investing, when you're trying to employ this strategy, you wanna focus on growth, companies that year to year grows their dividend. So this is a good one. The other one that okay, so let's get into the video in general. Actually, I've been talking a lot. So right here, these are all ETFs, and if you want to learn about ETFs, just go to Investopedia, and type in ETF here, or go to education and you see ETFs and you read up on it, right? So these are all ETFs. What ETFs are is a company will go out and decide to buy other companies. Like for example, company A can be Kasim's company, and then I go out to buy Apple under my company. Apple, Google, this, that, this, that, and the other, and I have like 20 different companies that I'm buying under my own personal company, and I package it up and sell it to other people as an investment strategy. So this one is focused on global growth. This one is global value and ultra aggressive. So let's click on this, and when we get in here, as you can see, these are individual companies that they go out to buy other companies. Like for example, if I click on this one right here, we all know who Charles Schwab. If I click on it right here, you can read a brief description of what the investment is about, and you can see their top holdings here, right? So Charles Schwab is a company that went out and they bought Microsoft and Apple. Obviously, they have 410 companies in this holding, right? So this is one of their top ones. And by buying a piece of this company, you technically own a piece of all the holding in this particular company. I hope I'm explaining it well. If you don't understand, just go to Investopedia and type in ETFs and read up on it. You'll understand what I'm saying a little bit more. So those are what these are. And then the other one that I have here is Warren Buffett. Everybody knows Warren Buffett, and I follow his investment strategy by following a mock portfolio of his investments. So currently, this Berkshire Hathaway is Warren Buffett's company. He's currently holding 24 companies. They yield this much. So Warren I don't think he worries too much about dividends. It does worry about dividends, but not much. And as you can see, these are all the companies that is in this portfolio. And by having this holding in here, I have a, I have a piece of all these companies, right? Apple, Coke. We all know all these companies. We use them all the time. So this is how you own a piece of the company, right? And like I said, the premise of this portfolio, the one big agenda of this portfolio is to grow the dividend, grow the dividend income on a month-to-month basis, right? So let's get into the big part of this portfolio. As you can see, this is 84% of the total holding. So let's say I deposit $100 into this portfolio today. $84 is going to go into this section. $10 is going to go into this section. 2 will go here, 2 will go here, 2 will go here. And there's a specific reason why I did it that way. I'm going to get into it in a little bit, but let's get into the passive income section. So this section is primarily responsible for the overall growth of this portfolio. And what I mean by the overall growth is right here of the portfolio. And for those that don't know, anything over 6 to 7% a year is considered really good. So being up 13% this year is actually really great. So let's get into the portfolio. So when we click on the passive income section, as you can see, it has 60 holdings. It has this is the dividend yield, so that means how much interest I'm making on all these companies and the total amount of money that I have in there. So let's say you have $100,000 in this portfolio, you'll be earning 4% of that on a yearly basis. And with this section of the portfolio, I've divided each pie into different sectors of the economy, because you just don't want to invest into one sector of the economy. Some people will be like, "Oh, is Apple a good stock for me to buy?" And I'll tell them, not really. Apple is a good stock to buy. I own Apple. I have Apple, but it's also very important to make sure that you're very diversified when you're investing for the long term, that you don't put too much money into one particular company, because you're not the one that is running the company. And some companies can run for years, and you discover that they actually are fraud and they go bankrupt and you lose all your money if you put all your eggs in one basket. We all know of Bernie Madoff and the Wolf of Wall Street. So you don't want to be one of their victims. So that's why a portfolio like this it's a great setup, and I highly recommend that you look into it. For those that are in the US, you can look into it to see if it's suitable for you and for your financial goals. Now, the reason why I'm heavily rated towards real estate is because they pay high dividend. All these companies pay on a monthly and a quarterly basis, right? So these companies, they all have stuff, realty income, they own malls, they own properties. People pay rent to these companies, and in return they pay dividend to their shareholders, which I own a piece of this company at the moment. I own a piece of this company, and I own a piece of this company. So that what that means is I'm entitled to get a piece of their earnings. Whatever amount of money they earn, I'm entitled to get paid from it. So if let's say for example Realty Income Corp, um, they get rents from their tenants, they get rents from their properties and stuff like that. A piece of that rent gets paid to me as the shareholder, and and all these companies, they do basically the same thing. And the thing with real estate is they have to pay out I think it's 80 to 90% of their excess cash after after all the expenses has been paid for. So that's really good. I'm gonna leave a description to this portfolio in the link below. So you can click down below and check out the portfolio yourself. Let's look at tech right here. I only have a few companies, but very, very strong companies, companies that we all know them, we all use the product. Like I said, Apple is great, they pay great dividend. And the whole point of this portfolio, like I said, is to constantly get dividend, just constantly get paid from dividend, and that's the whole point of this portfolio. Now, what I'm doing here is what you called investing, right? This is investing for the long term. You put your money in and you just don't worry about it, and you whether the price of the stock goes up or down, it really don't matter to me. All that matter is I'm constantly getting dividend. And like I said, if you don't know what this is, go on this website, Investopedia, and read up on what it is. You can type in, I'm going to leave this article in the description, or type it in the search box, and you can read up on it, and you will have an idea of what I'm talking about. This is how I invest for the long term, and I'm going to bring I'm going to start another video series on how I use this platform here in the future. But this is what investing is. You put your money in and you just constantly put money in over time, and you're not going to take the money out for at least like 5 to 10 years, and you just collect the dividend. The dividend that you collect gets reinvested back into the company. So let's say let's look at finance now. Let's say for example you get paid dividend from Bank of America. The money goes back into the portfolio to buy more stocks, right? So you're not going to take out the dividend. Whatever interest you're getting paid, it goes back into your portfolio and back into your portfolio and back into your portfolio. And over time, the expectation is the pie, you see from here, the pie will grow over time. As you can see, when I started this portfolio, it came down a little bit, but I kept on putting money in, and I kept on putting money in, and it's growing little by little, and it will grow over time. This is a model portfolio. It's based off of $100 initial deposit, and this is not my actual well, this is my actual portfolio, but this is not my actual numbers. This is my actual numbers invested. This is the returns of my actual portfolio, but this is not the actual number that I'm investing. Once I get my technical analysis videos done and out of the way, I'm gonna get into this particular portfolio. But the whole point of me doing this video is to highlight the difference between investing and trading. Something like this, where you have a lot of different companies. Let me see if I can click on the particular holding. But something like this, where you have a bunch of different companies that that we all know all these companies. Um, you invest in them, they make stuff, they make products, they make stuff that you and I use, and in return, by investing in them, you get a dividend, you get an interest from every single dollar they earn. You get money from them from every dollar they earn, and you use that money to invest back into your portfolio. And over time, the goal of of a setup like this is, over time, when you get older or when you decide to stop working or anything like that, you can withdraw from the dividend. You can withdraw money from the interest and live off of it. All right. So that's the point of the portfolio like this. This is what you see on a regular basis from me. This is what you see on a regular basis. And this is the very basic chart. Um, and this is trading. This is trading. This is what determines prices of stock on a regular basis. Buyers and sellers coming into the market, bidding prices up, or sometimes they bidding prices down, right? So this is what this is trading. And something like something like this, something like this kind of setup, this is investing, right? Because you're putting your money into any particular company, and you're holding it for a long period of time, and you expect that the company will grow over time. And for me specifically, I expect that all these companies will constantly pay me dividend and increase their dividend over time, right? And the other part is trading. This is trading, right? And let me just quickly adjust this. I like to do this ever so often so you can see what I'm talking about. Now, this when you go on this website, tradingview.com, and you sign up and everything, you click on chart. When you click on chart, you're gonna get to this side of the website. You're gonna see something that looks like this. If you know me and what I do here on YouTube, you know I absolutely hate this chart. So go on this bar right here and click on Fibonacci chart. Once you click on Fibonacci chart, this is better. This looks a lot nicer on the eye and easier to deal with. And at the same time, you know I use two moving average. I use the 200 moving average, and the way you get that is by clicking here and going on CM right here, and you click on it twice. And once you click on it twice, it shows up here. You click here and you just change this to 200, and you get both, right? But I'm going to just take those out because this is just for explanation only. So let me just take those out and use the initial one that I use. I use my one. Let me put my one on. So what I just showed you right now, this is how you put it up, and this is basically trading. This is basically trading. You're looking for opportunities in the market to be able to short a stock when it's going down and buy the stock when it's going up. So this is, you place a trade that is going down, then you can also place a trade that is going to go up, or place a trade that is going to go up. So this, something like this is trading. This is trading. You're looking for opportunities in the market to be able to profit from the movement of any of this company. So let me just pick one of this company, for example. Let me go into here and go into real estate, for example, and look at this particular one. Oh, right. So then I go in here, I type in O, boom, their current stock price comes up. What I like to do is I like to see on a monthly basis. Okay, what's this company doing on a monthly basis? Okay, their stock has been going down. So because I have it in my portfolio and they pay dividend on a regular basis, it would make sense for me to keep buying the stock at a lower price, because if I was willing to buy at this point, or I was willing to buy at this point, here is also a great price for me to get in and still buy the stock. So this is how I look at long-term investing, and right here is how you can learn how to take advantage of opportunities in the market, for you to be able to trade the stocks and be able to make money from them. So the two parts that I look at is, one part is long-term long-term investing, which means you need to get educated, you need to read about all these different topics. And then once you know about what the topics are and everything, then you can make your own decisions on what direction or which direction you would want to go in. So for me personally, I've chosen to go in the dividend growth investing route for my long-term investing. And then in order for me to be able to aggressively fund this, I've decided to learn how to trade. And this is why I'm bringing all these trading videos to you, so you can learn how to trade too and be able to make money, because you really can make money from deficiencies in the market. Like for example, let's say you decide to short here and be able to get out here, boom, you'll be able to make 5%. You'll be able to make 5% on those trades. So these are stuff that people take advantage of in the market. Trading helps create an income source that you can then feed back into a long-term investment strategies like this. Well, that's the end of this video. I hope you've liked the video. Please bear with me again. I'm really new to YouTube and I'm trying to figure out how I'm gonna have everything set up, and it's really difficult to just be talking to yourself using the microphone. So please subscribe if you like this content. If you find this helpful, give a like, comment down below, and yeah, let's engage and let's talk, let's exchange ideas and stuff like that. So yeah, I will see you next time and have a good day. Bye.